Good morning, everyone. This is Ryan Edner with your Wednesday, December 4th morning commentary. Let's take a look at the maps here again real quick. We have 11% of the corn harvest to finish up. We see the 1 to 5 day map does keep us very clear for most areas, especially for the areas that are most focused on that 11% of harvest to finish. So that's good news to see here. Flipping over the 6 to 10 day map, we see a little bit more rain moving into the east. This morning's map added also a little bit of additional rain for Illinois and Wisconsin. But again, still enough dry areas that hopefully we can get that last 11% of corn harvested here in this 10-day window and not have to rely on any clear weather past that. Let's flip over to the morning China headline. We seem to have one every single morning, and this is what we have here this morning, that U.S.-China moved closer to trade deal despite heated rhetoric. Negotiators are saying that they're getting closer to tariff relief. We know that tariff rollbacks are the number one sticking point for this Phase 1 deal. The morning headline seems to suggest that negotiators are working on that, and they're getting closer to it, and that they also pointed out that maybe we shouldn't be focused on every single headline that comes out of Trump. They are working on this, and they seem to be making progress. That is why, as the recording of this video, we had the bean 6 higher in the overnight trade. We'll see how much of that holds up. Switching over to corn, let's look at the historical ethanol report. We see that last week finally found a ethanol production report of 1% over last year. Keep in mind, USDA's numbers are using numbers that are right at last year. So if we see any ethanol production that is above last year, that can be considered supportive. Last week it was 1% above last year. So this week it'll all be about, is this a new trend or was that just a 1 week event here? So we'll see here today. Again, the target is, again, just at last year levels or slightly above to look supportive on the ethanol report. Let's look at Monday's commitment to traders report quickly. 2 changes here. Corn, funds were small buyers of about 7,500 contracts. That ends a long-standing streak of selling of corn. So while this buying wasn't very sizable, it did take away a long streak of selling. So that is a slightly positive outlook there for the corn. Switching over to the cattle, a little bit of the opposite. We've seen a long-standing streak of buying that slowed down to just about nothing. 108 bought contracts for cattle. Again, that is virtually nothing in the scale of the funds. So we'll want to keep a close eye on cattle here to see if fund trading picks back up, because they do have more room to buy. They're nowhere near their record long position. Or if they start to liquidate a few, which we did see a small sign of that Friday and Monday, but not yesterday. When looking for cash cattle bids, let's keep in mind our show list is down 21,500. That would imply a $1 or $2 higher cash trade. Based on last week's cash trade of 118.21, that would imply trade will most likely be looking for a 118 or 119 bid seen today.